Hey, everybody. It's your boy, Sean McLaughlin, at Options Sean on Twitter X. Today is Thursday, January 30th, 2025. You'll notice I'm in a different location. I'm at a hotel in New York City where the All-Star Charts Portfolio Accelerator is happening. I stepped away from the meetings to pop up here to record this quick video with you guys. I apologize if the audio is a little echoey. I don't have my normal audio set up here. We're just cooking from my laptop. So bear with the audio and the echo, but I think we'll be okay. Hope everybody's doing well. Hey, we had the Fed yesterday. That shook things up a little bit, but at the end of the day, it seemed like it was a bit of a snoozer, a bit of a yawner, which that's good. We had a little wild start to the week with all the news about the DeepSeek and the AI that shook things up. So the week has been not without drama, but seems like things are holding in there the way we wanted to. So that's good. So before we jump into any charts here, let me drop the old disclaimer here that everything we discuss is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something along the way. All right, let's pull the old S&P 500 chart here. This is the SPY. As you can see, this was Monday, a little gap down. Everybody got a little scared, but I think cooler heads have prevailed. We're getting back not too far off the highs. Meanwhile, VIX is coming down after that little brief freak out, getting back towards last week's levels. So to me, it seems like whatever it was that got everybody worried earlier this week, seems to be a bit of a non-event. I mean, yes, it may be significant to certain pockets and certain companies and certain industries, but is it a reason for the entire market to sell off? No, I don't think so. And the VIX is certainly showing that. All right, so for those of you watching me for the first time, this is the Options Jam session. And what we do is we review any action amongst some positions that we have open in the All-Star Options Service. We review updating stops on positions that we have on. And then, of course, we touch on new trades we've put on since we last spoke. So let's review the positions where we've had action this week. Let's start with the good news, okay? Not that there's any terrible bad news, but let's just get the good news out of the way. Let's talk about a winning trade that we exited. This is a trade we had in the ARK Innovation ETF, ARKK. This was a trade that we got into back in September, mid-September. We did a call diagonal spread where we shorted the November 53 calls and bought the March 55 calls. That was here. You'll notice these two green circles where we had to make some adjustments to the trade. And we did those adjustments that brought in additional credits. We brought in a 55-cent credit and a 92-cent credit right there. Eventually, after those adjustments, we were left with a vertical spread. So we ended up being long. This position morphed into a vertical spread where we were long the March 55 calls and short the March 57 calls as of this last adjustment. And we were able to exit that spread for $1.60. Now, the most that spread could have been worth is $2. That's the difference between the strikes. That was the long March 55 calls here and these short March 57 calls. So the most that spread could have been worth is $2. I sold it for $1.60, which is 80% of the full value of the spread. To me, that's good enough. I don't need to sit around and wait for those extra last couple nickels and dimes because I'm still holding all the risk just to earn an extra 5 or 10 cents. Not worth it to me. So I closed for $1.60. But when you combine this closing credit of $1.60 with the other credits that are brought in along the way, we closed for a combined net credit of $3.07. This was a trade that we originally put on down here. You can see for $1.25. So $1.25 got out for $3.07. Better than 2 times our investment, on the way to 3 times, 3x our money. Great trade on ARK. The trade did not play out the way I thought it would, but it worked out profitably. So we're happy with that. So put that one on the board, put it in the books. It's a win. Happy to take it. These next 3 were not. NVIDIA here. This was a bull call spread that we got in, and NVIDIA obviously got sucked in with the whole news event from this weekend. I mean, it was the leader of the negative news front on that. And so that bull call spread that we were in March options, we paid $8 for. We unfortunately got stopped out and closed it at 368. Not a total loss. And in fact, the loss in any other circumstances with Nvidia trading at around 120 a share, in any other scenario, we probably would have lost more. We maybe would have only gotten $2 for that spread, right? But because of this sudden out of nowhere market reaction, volatility spiked in Nvidia. And so that actually helped the value of our spread. It kept some premium in the spread. So we lost a lot less there than we might normally have lost in ordinary market conditions. So silver lining, still a loss. We lost a little bit better than 50% on our invested capital and trade, but we'll take it. Similarly, in the same news event, SMTC, which is also a semiconductor stock, got hit in sympathy with Nvidia. This was a bull call spread. We paid 650, but again, same story. This is a bull call spread. We got out for 502. Again, because of the rising volatility that actually kept a bid in the premium of these options, we were able to get out at better prices than we might have otherwise been able to get out. So silver lining, and at the end of the day, the loss wasn't all that bad. We paid 650 on the way in, got out at 502. That's a minor loss. I'm pleased with the outcome. And somebody in the chat room was asking me today, given the way SMTC has rallied today, he was asking me, or she was asking me, should we get back in the trade? My answer was, for me, no. This to me looks like a busted chart. Sure, it could go back to highs. That could happen. Totally within the realm of possibility. But to me, this is a busted chart. The close below 64 was my signal that I'm earlier wrong. Either way, I wanted out, and so I am out. And I have no interest in getting back into the trade. But if I were to get back into it, I would treat it as a completely different trade. I might even trade a different option strategy. I would certainly use different strikes, maybe even a different expiration. It would be a completely new, different trade. I wouldn't just get back into this old trade I was already in. It's case dependent on what the market presents at the time that I want to get in. But for now, we're out of SMTC. Finally, DMRC. Got caught up in the sell-off this week. This was a call calendar spread that we paid $5 for. We got in at perhaps the worst possible time. It happens, right? Got in on June 6th, and that appears to have been at or near the top of this move. A close below 39.50 was my signal to get out of this trade, and we got that this week. So we are out for $1.85. We did have a roll there in between, though. We paid $5 net between buying the June 55 calls and selling the February 55 calls. We were able to get a roll on November 28th where we brought in another $1.85 credit. I'm sorry, a 95-cent credit, excuse me, on the 22nd. I don't know if I said that right. On January 22nd, right here on this day, we were able to roll those February 55 calls to March 55 and bring in a 95-cent credit. And then with the close this week at $1.85, the net loss for this campaign was $2.20. So not terrible, not ideal, but at least we were able to get one roll off, and that helped mitigate the loss somewhat. So that's it for all the closed trades this week. Let's update some stops. We do have some stops to update, which is good news. Usually that means stocks are going our way. In no particular order here. We'll start with NET. I mean, boy, this thing has been doing really well for us since we got in here on the 17th. We're in a September 120, 160 bull call spread. That means we're long the September 120 calls and we're short the September 160 calls. We paid $12.50 for it. And it's moving our way. I'm moving up our stop. Our stop, I believe, is at 108 before. Moving it up to 112 kind of corresponds with this 50-period moving average. I don't want to see net get back below 112. If it does, that's a signal to me that the trend is over, at least on my time frame. So we'll exit the trade. But for now, the new stop on net is 112. Next up is Dash. This trade has made us wait a little bit, but it's finally starting to work for us. This also is a bull call spread. We're in June options, long the 200 strike and short the 250. We paid 850 for it. This week, breaking out to new highs for us. This is great. I'm updating our stop now to 166. Okay, we don't want to see DoorDash get back below 166. If it does, I'm out. Next up, AEM. We got into this trade a little bit more recently. We got into this trade last week. It's a call diagonal spread. So we are short the March 95 calls and we're long the January of next year. The January 120 calls. We paid $1.40 for it. I'm moving my stop to 77 now. We just scooched it up a little bit. This 97.50 level is starting to come into play. And I'm mentioning this because if we do get to above 97.50, then it'll be time to roll the short options. Those March 95 calls that we have will be in the money at that point. I will look to roll those 95 calls up to the 100 strike. I'll do it into either April or May or June options, whichever monthly expiration I can get a credit for. That would be my preference. But we'll see what happens when it gets there. But that would be the plan. The ideal scenario is that we roll those options up a strike and out a month or two in order to collect a net credit to lower our risk in this trade. But for right now, our stop is moved up to 77 in AEM. Finally, Robinhood. This one's going well for us. It's breaking out with crypto. Hopefully it's a sign that there's more upside to come in crypto because we do have some crypto exposure, which we'll talk about next. But we're in a June bull call spread again. Bull call spread's pretty popular, it seems like. We're in the June 40 calls and we're short the June 60 calls. We paid $450 for it back on December 12th, I believe. With Hood making all-time highs here, we are raising our stop to 41, which corresponds with this rising 50-period moving average. So any close below 41 will get me out of this Robinhood trade. Okay, lastly, let's review some new positions we've put on since we last spoke. I will not have the trade details on the screen here. If you want details for these trades, please head to allstarcharts.com, head to the members section, head to the options section, and you will find detailed trade plans for every trade that we've got on in All Star Options. Trade plan will talk about the setup, what we like about the chart, which option strategy we're using to express our thesis, how we will manage risk, where we will stop out, where we will take profits, where we may or may not make adjustments. All of those details can be found in each blog post for each trade that we put on. But I'll just briefly say for this trade, App11 Corp, we put a bullish trade on here. We're betting on a earnings catalyst coming up on February 12th is when they have earnings. So that's a bullish trade there. Next up, Bank of America. Got into this trade on Monday earlier this week. This was a bullish trade. We're betting that Bank of America is just going to continue this trend that it's been on all year. And finally, just yesterday, we put a bullish trade on IBIT, which is the iShares Bitcoin ETF. So this trades with Bitcoin. It's our version of a Bitcoin trade. So we put a trade here on IBIT. Again, all the trade details for these trades can be found at allstarcharts.com. Head over there. All right, folks. For those of you who like this, here's the screenshot of the updated stops that we made today. To take a picture if you need to. Those are the stops. And lastly, if you have any questions about anything we've discussed, whether about the trades or about All Star Charts or me or the Portfolio Accelerator event that we're at here in New York City, if you have questions about any of that stuff, shoot us an email, info@allstarcharts.com. It'll get routed to me. I'll be happy to help you. If you're not involved in All Star Options, there's the link, stockmarkettv.com/get All Star Options. We'd love to have you in the community. We have a live chat room. We're all sharing ideas. We're all commiserating that things aren't going well, and we're all celebrating together when they are going well, and we're all learning all along the way. So please join us if you're not. We'd love to have you. And if you like the charts that I share here, I use TrendSpider.com, and they're offering 50% discounts on subscriptions if you use my promo code Sean50 at TrendSpider.com. So give them a check out. All right, folks, that's all I got for you. I got to get back to the Portfolio Accelerator. I mean, I'm probably missing some good ideas right now. We've had a lot of great conversations this week. And as I told everybody at the Portfolio Accelerator when we started, I'll tell you that this Portfolio Accelerator event is not for me and JC and Straza and everybody else. It's not for us to sound smart. It's for all of us to share ideas and talk about what we're seeing, what we're observing. And we're getting a lot of great ideas from our customers. We're getting a lot of great ideas from our special guests who've been attending these events. So it's just a great event. There's a lot of great ideas being shared. I'm learning a lot. I know everybody else is too. We'd love to have you join our next event this spring. Hit us an email, info@allstarcharts.com. We'd love to have you there. Okay, folks, I got to get back to the meeting. Take care. Enjoy the rest of your week. I'll be back home next week. Everything back to normal. So we'll see you then. Otherwise, take care. See you next time.